Welcome back to the channel, Crypto Trend Trader with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright, so I've got the Bitcoin chart pulled up. This one is Coinbase. I'm on a short time frame. I'm on the 15-minute just right now. Essentially, what we were looking at was we topped out this move back here, basically consolidation, and then we started to form this descending broadening wedge. Called it out very clearly, anticipated the measure move to the upside, which would take us back to that $40,000 range. Now when we broke out here, we got the initial move up and we're oscillating inside of this blue and red channel here. When we broke down from that channel, it looked like we were going to fall short of that move and at least come back down here for a retest at the bottom. Now we had anticipated that the bottom was going to come in somewhere between 30,000, like 29,000 or 27,000. At least temporarily. So after that move completed, broke out to the upside. When we broke down from the bottom of this channel, we hit the measure move of the channel now, back down to the downside. And then we had anticipated this would be our base level for this move here as well. And we were talking about coming down to the 21 daily moving average, which we did perfectly. Came down to it once, came down to it twice. If we had the indicators pulled up right now, you notice that we put in bullish divergence between these 2 points. Which point in time, obviously that green circle is the perfect buy area. Take a long out of that area. And now what I want to pay attention to here is what's happened since then. So from that bottom here, from the top up here to that bottom now, I have this yellow Fibonacci in place. On that previous move, when we came down, we broke back out of this and then came down, got the retest, and then looked like we were going to get a bullish, retest to the upside. When we broke out of this triangle pattern that was forming right here, it was very clear that we were going to come up and at least retest that high. I anticipated at least a retest of the 0.5 Fibonacci level here in yellow, but when we broke through that, consolidated on top of it, we shot straight through it, and what I was expecting to happen was for us to top out somewhere up here in the 786 region, which we did. We came all the way up to the 786, slightly overshot it, broke down from it, tried to get back up one more time, and then again broke down from it. And, it's very clear, obviously, at that point in time, once we broke out of this move right here, that we were going to be getting continuation to the downside off of this little triangle here. So once we broke down from that 786, our next target is going to be the 618 in yellow. And that is at 36,936. We have the 0.5 back down here, which corresponds with the tops over in this region at 35,500. Or we have also, if we switch over to a slightly longer time frame, we can just put it on like the hour, say for instance, and you can see we essentially had created like these 2 touch points on the bottom here. So a breakdown from this top pattern, a breakdown from this potential uptrend, and you could draw this a lot of ways. It depends exactly what you were looking at. But, essentially this was our uptrend right here. Once we broke down from that, we would expect the measure move to take us back to another substantial fib level. So now we could come all the way back down to this yellow trend line right here, and that would come in at 34,300, put in a low, a higher low, and then another higher low, put in a high, a higher high, and then potentially get that breakout to the upside continuation, and take out the macro all-time high that we put in a few days back. So definitely a possibility of that happening. I want to talk about how I knew this was going to top out here at that 786, 886 region though. If we zoom out a little bit, if we actually take from this past little sell-off that we got right here, and we go ahead and Fibonacci from that point, that little like 20% pullback that we got, that little flash crash, you will notice that when we came down here, we came down exactly to the 786. And then when we bounced, zoom in a little more, came down exactly to the 786. And when we bounced that 786, we came up to the 382, came back down to the 618 perfectly, went all the way up, topped out at the 236, consolidated, and then broke through it. So we came down to the 786 on the bullish fib retracement of that previous wave. And then for the bearish, bullish fib retracement of the bearish dump from the top down to this temporary bottom at 30,000, we came back up again to the 786. And then you can see, based on this yellow Fibonacci that we put in here as well, if you took that one from the top to the bottom, you know that we were corresponding quite a bit with those various levels. So then after that, after we topped out there, we then drew another Fibonacci from the bottom point right here, not the all the way at the bottom point, but the bottom point from the bounce right there to the top here. And you'll notice one more time that when we came up, we came down to the 236 and broke through that, and now we're potentially looking to hit like one of these further Fibonacci targets to the downside. Now the other option would be if you took this white fib level and moved it all the way down to the bottom point right there, and you'll see how much more it looks like this entire move has topped out. Because when we topped out here in white, we came down perfectly to the 236 and then got a reactionary bounce right here, which I would expect us to come up, you know, potentially back up to the 786 or the breakdown point, followed by continuation to the downside. And you'll notice that if this is like basically a neckline that we're putting in here, the continuation move is going to take us down to like the 382 of the white and the blue fib right here, or potentially down to the 0.5, which would line up once again with this diagonal uptrend line. So I think there's a very high likelihood that our next target is going to be somewhere in that 34,400 range. There is potential we could, you know, base out slightly higher at like 35.7 or something like that, and then get continuation to the upside. There's also a very high likelihood that this is in fact a bullish bounce for a bearish retracement, and that we're going to put in an A, a B, and then a C pattern. Typically the C will take you to a lower low than the previous one, but it is possible that we could put in a C like to this 0.5 range and then get continuation to the upside. So, and now if we switch over also to our CME chart, and I just want to look at the exact same thing, because I was starting to think actually while this was like developing they were potentially going to overshoot that 786 target, and that I was going to be wrong and we are going to break straight out to higher prices. Well, we have like a parabolic support line here in white, and then we have basically a parabolic resistance line here in red. When we finally broke out of that, we started essentially like moving towards the top and creating like a wedge. Broke out from that and stayed inside the top portion of the wedge. When we broke down from that, we got the measured move. And where did we stop at? Once again, you'll see we drew this in from that flash crash jump when the CME opened, and we came straight back down to refill that gap. When we put in like a $5,000 gap, we came all the way down, filled that gap, and then immediately got bought back up. So from that low at 28,000 to the high at 42.5 roughly, that's our green fib right here. And that green fib level, we came down to the 786 just like we did on spot price action. Got the bounce with that wick, but we never closed below the 618. We put in a flat bottom on the 618 on the 4 hour. So you'll see we had 1, 2, 3, 4, 5, 6 closes or opens directly at that line before we got that continuation to the upside, which obviously, you know, you could say was the descending triangle. You could say was potentially head and shoulders. We had called it out as a W pattern and expected the measure move to the upside. Well, if you look at the measure move to the upside, you know, assuming that you're not taking into account wicks, you're only looking at the actual candle closes. The measure move from the breakout point is going to take you up exactly to the 786, which is where we topped out at. So once we got that move up to the 786, you'll see we topped out, tried to break above it, and only put in a couple slight wicks right here, but never actually got a close above the 786. So this is even clearer price action from the bottom to, or I'm sorry, from the top to the bottom. We topped out at the 786. From the bottom to the top, we topped out at the 786. So we have basically like symmetry, within the moves, which is always good to see. That's always a good thing. So now at this point in time, based on the CME price action and our parabolic trend line that we were finding as support previously back here, I would expect us to come down once again to this orange fib level, which you'll notice that the 0.5 was clear support resistance in this region. It was clearly where we topped out and put in the neckline for that W pattern, and then the breakthrough of that got our continuation. So a retest of the breakout would put us at 36.6. So it looks like very likely that we would come down, essentially we came up to the 786, came down to the 618, we would come in again and put in a lower high, and then come down to the 0.5, which is going to line us up perfectly at the 382 in green and the 0.5 in orange at that 36,570 range, or roughly around there. At that point in time, we'll see, can we find support on this white line again and then get continuation to the upside, take out this micro high, and then eventually take out the macro high and move to higher prices, potentially like the 44,000, or $50,000 range, or are we going to break down from this and get continuation to the downside? Now, there is something very important that I still want to pay attention to. I know people don't like talking about gaps or don't understand gaps or whatever. There's a lot of confusion based on gaps, but essentially I'm looking at the 4-hour chart right here, and I'm looking at like where there was gaps left behind, and you'll see we left a gap right here in that $18,000 range and then came back, and this to me is filling the gap. We came back down close enough to filling almost the exact complete gap right there. There's no previous gaps before that. We left a gap right here, came down and filled it, left a gap right here, came down and filled it, and there's a series of them, including this one right here at 10,000, 9,800. We gapped up from that, took basically from July 28th or something like that, and didn't fill it until September, beginning of September. So it took months of price action to come back down, but we filled that gap. So now I want to pay attention to this right here. We have a gap down here from 18,000, and then we have a gap as well from 23,000, 24,000. So to me, there looks like a very high likelihood that at some point in time we will come back down and fill those gaps. Now, it does not have to get filled. Gaps do not always have to get filled. There's a thing called a breakaway gap, which essentially is what these are at this point in time. We have a breakaway, and we've not filled those gaps at this point in time. Could we move to the upside and never see prices below 26,000 again and never fill those gaps? Yes, it's completely possible. What is the likelihood of that? I would say like roughly 5%. I think it's extremely low likelihood. Could we continue up to $50,000 or something crazy like $100,000 and then eventually come back down here and fill those gaps? Sure. $100,000, 80% correction, takes us back down to $20,000, fills the gaps. I don't think that's likely. I think it's much more likely that we're going to come down here sooner than later. I am not saying that it's not possible we retest this high or even take it out, but I think there's a very high likelihood that we're going to put in something reminiscent to a lower high top pattern or a double top or a slightly higher high topping pattern. So I am paying attention to that very closely. Typically when you get a violent sell-off like this and then you get a bounce, a retest, and put in a higher low with bullish divergence, you will get a retest back up to those levels to attempt to see if you can break out again. But based on this reaction level of this rally, this looks to me like an extremely bullish dead cat bounce, or extremely bullish, retracement of a bearish dump or potential topping pattern. Couple that with the stock market putting in multiple daily bearish divergence candles or bearish engulfing candles on basically all the indexes. Starting to look like we may have topped this out, at least temporarily. I think a lot of the stimulus with the Biden plan was already priced in, $2,000 checks, all the money for governments and schools and all that stuff. I think all that stuff was priced in. They were expecting at least a $2 or $3 trillion plan. They got a $1.9 trillion plan. They were expecting $2,000 checks. It looks like we're very likely going to see, most people are going to be getting these $2,000 checks. I'm not sure if people are getting checks already. I imagine they are, or at least some people are. I'm not sure. I mean, I know some people have already gotten the $600 checks. We'll see when people get the $2,000 checks as well. I believe they left the stipulations the same, so that it was somewhere around like if you were making less than $70,000 or potentially $100,000, you would be eligible for those. I don't know. I did not get one, so I can't verify that completely. But I imagine that it's very likely, that those $2,000 checks will be going out soon. But I believe it's the remainder of the $2,000. So if people got a $600 check already, they will get a $1,400 check on top of that for a total of $2,000. And then based on the actual breakdown of the, I didn't see anything about forgiving of student loans in it. I saw a lot about tax credits. I saw a lot about, basically like bailouts for states, school funding. Didn't see anything specifically about like frontline workers or heroes, but with the rollout of everything going on right now, the overly bullish factor, you know, for the last like 9-10 months. You know, I think a lot of this stuff is priced in. I think the reopening, you know, trade is priced in. I think the vaccine trade is priced in. I think the stimulus price is priced in. You know, and one thing that really kills me about this whole situation is at first it was like if Trump wins, then the markets will stay bullish. But if Biden wins, they'll go down because of taxes. And then it was if Biden wins, but, you know, the government's split, it'll be bullish because they won't be able to get anything done. And now it's like, okay, so Biden won, and now they both won both the Georgia seats, but he's going to print so much stimulus that the raising of taxes won't matter. So essentially what's happening is we're just like moving the goalpost here. You know, every time something different happens, we change the story as to why we're still bullish in these markets. And to me, that's typically when you get at least temporary market tops. Now, once again, I'm not getting bearish on these markets, you know, at the moment. I took the long trade here. I took the long trade again here. And then here I hedged the position, you know, with a short trade. So if we come back up here and take it out, that's fine. But in the meantime, I will leave it in here neutral essentially, so that I don't have to sell off the spot that I accumulated, you know, at this breakdown, the 30% from the top. And you know, essentially, like if we break down from here, you know, I can at least make up the loss on the long from the short position, but you know, I don't have to sell spot, so I'm essentially covering myself. If we break down past this trend line right here, though, you know, I will get out of the trade with the, you know, modest profits, but I've already taken some profits on the way up as well, you know, at the retest of the top and then the measure move. But essentially, you know, I just want to cover myself so that I don't give back all this if we break down. And then also, I want to cover myself so if we do break back to the upside, it takes out my short and I don't have to rebuy these positions. I'm already in from a phenomenal price, so I don't have to worry about, you know, potentially double topping or, you know, FOMOing in because we break to a new all-time high and I have to buy back in over 40,000. So, you know, that's just how I do it. That's not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research. Trade responsibly. Let's zoom way out here. And I want to look at this whole move up here. So essentially from that way down here at, you know, it was like $4,000 on CMEs back in March for the little crash. You know, we got initially this move up to here where we put in like that head and shoulders pattern breakdown that came down exactly to the 236 and then got continuation. That's an extremely bullish move. 9,900, that was a retest of the 200 moving average and a perfect place to accumulate. From then, we basically went parabolic with all the money printing and everything going on. From all the way at the bottom here in blue, I have the fib. Comes up all the way to the top, exactly. And right now, you'll notice that the 236 in blue for that fib from the bottom to the top comes in with our first gap, you know, on CMEs that we were talking about in this $25,000 range. And then the 382 comes in line perfectly with our second gap here at that like $18,000 to $20,000 range. So is there a very high likelihood that we will at some point in time retest the all-time high as support, you know, and that will hold and then we'll get continuation to the upside? I think there's a very high likelihood of that happening. Is it also possible that we never go back to those prices? Of course. Is it also possible to blow straight through that and come all the way back down to a 50% retracement? Yes, 13,625 is the 50%, and the 618 is 10,365. And if we go down to 10,365, it's going to be very hard for me to stay bullish, you know, anywhere below that point. So, and you'll notice too that if we kind of zoom out here one more time, let's go to the weekly. This was our pattern. You know, we had drawn this in way back when, and you know, basically had a triangle, and then when we got the breakout of the triangle, came back, retested our breakout, and then we got the initial pump up to try to take out this high, which we did. We got the next pump up to try to take out this high, which we did, and that was at, you know, at $20,000 was the last point where I said that there's any reason to not be 100% bullish on these markets, you know, and expect a blue sky breakout. I've talked quite a bit about blue sky breakouts and the significance of them because there's essentially no one underwater in a position. You know, there's no sellers. No one is forced to sell because everyone's in profit. So until there's a reason, everyone tends to just, either double down or dollar cost average in or just hold regardless. And with a fresh inflow of money coming in and limited supply, the fundamentals of Bitcoin, even though it lagged behind the stock market for quite some time, finally are looking good. And now here we are, after going full on parabolic with irrational exuberance in the markets, and potentially looking like we could top out the stock market, and a lot of this money printing and whatnot is already priced in, and yet the economy is not looking any better or as good as people are hoping. At this point in time, I think it's very likely that we could come back down and get at least a retest of that $20,000 range or somewhere in this area, filling both these gaps, finding support, and then getting continuation to the upside. If we got another crazy crash down here, though, I think this would be a very likely place that we would find support. If we switch over to the monthly here, you'll see the way I have this drawn in, basically with the green line right here, if we were to just straight crash down tomorrow all the way back down to the 618, we would find support at that line at 10,435. I don't think that's likely to happen, obviously, and this line will continue going up over time. But if we took some time and just kind of stair step down here, and basically like topped out at the, or bottomed out at the end of the year or something like that, that would put us in this like 13.5 range. It would fill both our gaps. It would give us a 50% retracement of this top. There's definitely a high likelihood of that happening, and it's definitely worth at least paying attention to. Once again, not saying it has to happen, but I definitely see some merit for that potentially happening here in the future. So, and then one more time, there was something else that I noticed that I didn't actually discuss that was confluence with a lot of these other things as well. When you're looking at a gap, what you're looking for is where the candle closed and then where the next candle opened. So you don't take into account this wick on the gap, but if we got a wick up, we would take into account, because that would essentially be the wick filling the gap. So here where we closed right here and reopened here, we don't take into account the wick right here. I'm sorry, we wouldn't take into account a wick this way, but when this sells back off, the wick right here is it filling the gap and then rejecting lower prices and then getting continuation. So here we don't take into account this wick to the downside, but this gap right here took us back to that 38,970 range. So we sold off, we basically closed right here, and then we closed right here and left that gap in price action. So once we broke out from this pattern, we were expecting to at least come back up and potentially fill this gap. At which point in time you'll notice that when it looked like we were going to top out on spot at that 786, futures had not yet moved that high, and then we took out that 786 slightly on futures, and then we got this wick, which basically came up and closed the gap. And then we proceeded to sell off directly right after that. So I thought that was an interesting move, interesting way. Everybody always talks about gaps to the downside and is bearish about how gaps have to get filled, but this was a specific example of us potentially filling a bullish gap, bullish price action coming back up to fill a gap before we could potentially get moved back down. Now, if we move back to the upside, obviously the gap would have got filled regardless. That's fine. But I just wanted to bring that up. I know a lot of people misunderstand gaps. I would not look at a gap on anything less than a 4-hour or daily, just because it's not significant enough on a smaller time frame. And the idea of the gap is that it closes overnight and then reopens the next day. So if you're looking at like a 15-minute, you're going to have like tons and tons of gaps, obviously. But if you look at a longer time frame, you're not going to have nearly as many gaps, and it's going to be very much more clear how price action corresponds with them. So, and then just flipping up the indicator oscillators here, we'll notice that we had the high on the TJD TDMACD, sold down from it, and then we basically flipped the slope over red, and then this was our, this is a very common thing to do. We come back up, retest, try to get above it, which we did. We got above it, try to flip the slope back over blue. Could we find support here, get continuation, flip this over blue again? Yep, and it's going to look bullish if we do, and we'll start, layering back into another long. But, once we get 2 red histograms and this breaks down from the slope, it's going to look like a rejection and then continuation. And we'll expect lower prices. Here, just like we were saying on the way up, once we leave the bullish control zone and we get the hard sell, the hard sell in yellow and leave the bullish control zone, so it's no longer red lit up back here, that's going to give us basically the a trending move to the downside, at least on the micro. When it flips back over blue, that looks bullish again. We would not expect it to get down into the bearish control zone because the bulls have clearly been in charge by the amount of red here. So now it looks like we are basically coming back up, topping out off of that bullish bounce of the bearish sell-off, and then potentially getting rejected. Looks like we're getting ready to exit that bullish control zone if this continues to sell off right here, and then we would expect a similar move to the downside, which once again could take us just down to this level, and we could put in a higher low and then get continuation. Or if we get the breakdown from this, that could be a massive move, because we would essentially be looking at this channel as our pattern, and then the potential for the breakdown would be the measure move from the actual channel's width itself, which in this case would be let me take a look. Which in this case, say it came down here, oscillated around a little bit, and then broke down, it would basically be a retest of the bottom right here, and essentially putting in a lower high. Now, could we come back down here, find support, and then get continuation? And that was just an A B retracement, and then a C retracement, and then we continue to the upside? Yep, and I think that's very likely to happen. But I would also pay attention to, could we potentially be coming down here to fill either one or both of these gaps as well. So, well, there you have it. Just wanted to do a little bit of technical analysis. Let's take a look real quick at the daily as well while we're here, and just kind of see what we're seeing. Once again, you can see indicator oscillators. We got the 2 red histograms basically sold off. We're getting like equivalence dead cat bounce. If we see a second histogram come in here again, we would expect to come all the way down and retest that blue slope line. Find support one more time. If we do not find support, we would expect continuation to the downside. Once again to fill that gap down here. And then, we're paying attention also. This is a longer time frame, so it's obviously more substantial. But we left that bullish control zone. It's no longer red lit up in the background. We got the hard sell, and we are getting, a violent sell-off. This was over a 30% sell-off to the downside, followed by, a nice bounce back up to almost recover it. But a lot of times you will see that somebody who gets caught with the large position, or exchanges get caught with a large position, you will come back up, retest the previous support where that closed at as resistance. They will unload their positions, and then we will get the actual move and continuation. So it's very important that we pay attention to that. See what the market is telling us, and don't make any assumptions. We could easily get a move back to the upside right now, but there is an awful lot of stuff pointing us to lower prices. So if we consolidate here long enough, basically through tomorrow, I could see us getting a bullish move for the weekend. This looks like a very bullish candle. Basically selling off and getting bought all the way back up to where it opened at. So if it closes like this tomorrow, somewhere in this range, it's going to look good. If it starts to sell off, it's going to look bad or not as good. But if it sells off below 33,380, it's going to look extremely bad, because it's basically going to bearishly engulf this candle right here. And it's going to look like essentially like an island reversal, which is where you have, one candle sitting out here in the middle of nowhere, and then just start selling off from that. And again, you can see very clearly on the weekly where our gaps are, much more clearly, and see where we have potential to come back down and fill some of these. Well, there you have it. That's enough for today. Crypto trend trader. It's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Make sure you like, subscribe, share, all that good stuff. Appreciate the support and comments as well. I'm out of here.